And the Central Bank of Nigeria, CBN, has concluded a meeting of its Monetary Policy Committee in Abuja, Nigeria's federal capital, during which it took some time and some decisions on the management of the Nigerian economy. For details of the outcome of this meeting, we're now crossing over to Abuja Live, where the CBN Governor, Godwin Emefiele, briefs journalists.
Of September 2021, on a relatively comforting note, global growth recovery rate. The performance of the global economy in the first 2 quarters of the year and into the third quarter remained favorable, with positive outlook for the rest of the year. However, cautious optimism persists, driven primarily by mutating and more fatal strains of the virus and disparities in the progress of vaccinations across several countries. In the domestic economy, output growth performance continued to improve, signposting the positive impacts of the unwavering fiscal and monetary support by both the fiscal and monetary authorities to revive and sustain economic growth post-pandemic. The committee reviewed the developments in the global and domestic economic environments in the third quarter of 2021, as well as the outlook for the rest of the year. 10 members of the committee attended this meeting. Global economic developments. Committee noted the continuing rebound in the global recovery as several advanced and emerging market economies posted promising second quarter output growth figures despite the uneven progress in vaccination coverage. The MPC noted that the uncontained spread of the virus continues to pose downside risks to global recovery in 2021 and into 2022. The MPC further noted that despite the strong output growth identified in some advanced economies, several developing economies were still lagging in vaccination progress. Members emphasized that the widespread availability of the vaccine remained vital to surmounting the pandemic and attaining full and all-inclusive recovery of the global economy. Despite the challenges posed by the ongoing mutation of the coronavirus, governments across the globe remain focused on easing business restrictions and resuscitating economic activities. Consequently, the International Monetary Fund, the IMF, maintained its aggregate projection for global growth in 2021 at 6%, but increased its projection for the advanced economies to 5.6% from a previous 5.1%, while that of the emerging markets developing economies was downgraded to 6.3% from 6.7%. Price developments across several advanced economies has remained on a sustained uptrend and exceeding their long-run objectives. This is expected to continue in the short to medium term as against earlier forecasts that the upward shift was transient. Consequently, several advanced economies' central banks are currently considering early commencement of monetary policy normalization, even though policy rates adjustments are not expected in the medium term. Across several emerging markets and developing economies, inflationary pressures remained mixed, as some economies had much higher rates due to the lingering exchange rate pressures, capital flow reversals, high energy costs, supply chain disruptions, and poor response to policy stimulus resulting from structural bottlenecks. In the global financial market, committee noted that while demand for equities remained strong, an indication of renewed market confidence, gold price still maintained its post-pandemic high, reflecting the hedging by investors against a possible rebound of the pandemic. Long-term sovereign bonds yields are expected to improve with the commencement of monetary policy normalization by advanced economies, central banks. Committee members, however, expressed cautious optimism for a gradual normalization of monetary policy by advanced economy central banks, as a sharp retreat of policy stimulus may plunge the global economy into a crisis again. This may also increase the uncertainty around the full recovery of several emerging markets and developing economies. Called on the bank to rate the likely impact of the normalization of monetary policy on the domestic economy, domestic development. In the second quarter of 2021, there was a significant improvement in the real gross domestic product (GDP), which grew by 5.01% compared with 0.51 and minus 6.1% in the previous quarter and corresponding quarter of 2020, respectively. This recovery was attributed to the non-oil sector, driven by a rebound in services sector and continued growth in the agricultural sector. The oil sector contracted further by minus 12.65% year-on-year in the second quarter of 2021, compared with minus 2.21% during the previous quarter. This deeper contraction was attributed to several factors, including declining crude oil production at two crude streams in the country, associated with leverages in two major pipelines, deteriorating oil production infrastructure, poor pipeline maintenance, and the need to comply with OPEC Plus production ceilings. The committee noted the moderate improvement in both the manufacturing and non-manufacturing purchasing managers indices, PMIs, which, though still below the 50% index point benchmark, showed a marked improvement over time. In August 2021, the manufacturing and non-manufacturing PMIs improved to 46.9 index points apiece, compared with 46.6 and 44.8 index points respectively in June 2021. This was attributed to an increase in new orders, driven largely by rising demand, uptrend in business activities, and further normalization of economic activities. Similarly, the employment level index component of the manufacturing and non-manufacturing PMIs in August 2021 improved to 49.4 and 48.8 index points respectively, compared with 46.5 and 47.0 index points in July 2021. The committee expressed optimism that with the current level of monetary and fiscal stimulus, as well as efforts to increase vaccination and contain the pandemic, the Nigerian economy will continue to improve in the short to medium term. The committee reviewed the performance of the bank's various interventions to sustain the recovery of output growth and address downside risks to other external and domestic shocks to the economy. Interventions continued largely in the manufacturing, agriculture, energy, infrastructure, and micro, small, and medium enterprises (MSME). The bank's Anchor Borrowers program has cumulatively released the sum of 798.09 billion to 3.9 million smallholder farmers cultivating 4.9 million hectares of land across the country. For the 2021 wet season farming, the bank released the sum of 161.18 billion naira to 770,000 smallholder farmers cultivating 7 commodities on 1.1 million hectares across the country. Whilst harvesting for 2020 dry season under the program is rounding up, harvesting activities have commenced for the 2021 wet season cultivation. The Strategic Maize Reserve Program of the Central Bank of Nigeria has been useful in moderating maize prices, particularly by directly targeting large feed mills producers. Under its Commercial Agricultural Credit Scheme (CACS), the CBN has supported 657 large-scale agricultural projects to the tune of 708.39 billion naira. To support MSMEs across the country, the bank disbursed 134.54 billion naira to 38,140 beneficiaries under the Agribusiness Small and Medium Enterprise Investment Scheme (ACSMIS), and for the Targeted Credit Facility, the sum of 343.21 billion naira has been released to 726,198 beneficiaries, comprising 602 households and 123,468 small and medium enterprises. Under the Real Sector Facility, the bank released the sum of 1 trillion naira to 269 real sector projects, of which 140 are in light manufacturing, 71 in agro-based industry, 47 in services, and 11 in mining. Under the healthcare sector intervention, 3.02 billion has been disbursed to 110 healthcare projects, of which 27 are pharmaceutical, 77 hospital services, and 6 other healthcare service projects. The bank has also disbursed a total of 145.99 billion under the non-oil sector stimulation, not oil export stimulation facility. The CBN has revised the guidelines, working with Nigerian Export-Import Bank to improve access to the intervention and stimulate non-oil export growth in Nigeria. Under the National Mass Metering Program, 41.06 billion naira has been disbursed to 10 discos for the procurement and installation of 759,748 electricity meters. Under the Nigerian Electricity Market Stabilization Facility NEMS 2, the bank has also released the sum of 145.66 billion naira to 11 discos as loans to provide liquidity support and stimulate critical infrastructure investments to improve service delivery and collection efficiency. In furtherance of its intervention in the energy sector, the bank has also disbursed 39.2 billion naira to 6 beneficiaries to improve gas-based infrastructure to support the federal government's auto gas conversion program. The bank has also encouraged deposit money banks to participate in the solar connection facility to improve energy access in the rural areas. To promote entrepreneurial development, ladies and gentlemen, among Nigerian youths, the bank recently approved the implementation of the Tertiary Institutions Entrepreneurship Scheme. The scheme is designed to promote entrepreneurial activities and foster job creation among Nigerian youths. The committee applauded the continued moderation in headline inflation for the 5th consecutive month to 17.01% year-on-year in August 2021 from 17.38% in July 2021. The continued decrease was attributed to a marginal decline in the food component to 20.3% in August 2021 from 21.03% in July 2021. The core component also declined to 13.41% in August 2021 from 13.72% in July 2021. The MPC noted that headline inflation remained well above the bank's benchmark corridor of 6 to 9%, but expressed optimism that with sustained interventions by the bank, food production will continue to improve, thus moderating headline inflation further. The committee thus urged the fiscal authorities to build on earlier efforts to articulate a clear strategy to attract private sector investments while resuscitating critical infrastructure to improve the ease of doing business in the country. Members observed that the broad money supply M3 rose to 5.83% in August 2021 compared with 2.91% in July 2021. This was largely driven by the growth of net foreign assets NFA and net domestic assets NDA by 12.35 and 4.30% in August 2021 compared with 1.84 and 3.17% respectively in July of 2021. The growth in the net net foreign assets was largely driven by increase in foreign asset holdings of commercial and merchant banks. The increase in net domestic assets reflects the boost to aggregate credit net, which increased to 8.14% in August 2021 from 5.71% in July of 2021. In the money market, the monthly weighted average interbank call and open buyback rates increased to 13.45 and 12.97% in August 2021 from 10.72 and 11.6% in July 2021. This increase reflected the tight liquidity conditions in the banking system during the review period as the bank curtailed excess system liquidity. The MPC noted the moderate improvement in equities market during the review period as the all-share index increased by 2.67% from 37,907.28 on July 30th, 2021 to 38,922.5 on September 14, 2021. Market capitalization also increased by 2.63% from 19.76 trillion naira to 20.28 trillion naira over the same period, reflecting improvements in investor confidence following the strengthening of output growth. The MPC noted that the capital adequacy ratio and the liquidity ratio both remained above the prudential limits at 15.2 and 41.7% respectively at the end of July 2021. The committee also welcomed the improvement in the non-performing loans ratio at 5.4% compared with 5.7% in June 2021. Committee thus urged the bank to continue to sustain current efforts, bring NPLs below 5% prudential benchmark. The committee noted the improvements in lending to the real sector following the introduction of the loan-to-deposit ratio in 2019. Industry gross credit increased by 6.63 trillion naira from 15.57 trillion as at end of May of 2019 to 22.2 trillion naira at the end of July 2021. The credit growth was largely recorded in the manufacturing, oil and gas, and agri sectors. The committee noted the significant increase in the external reserve, which rose to $35.97 billion at the end of August 2021 from $33.49 billion at the end of July 2021, representing an increase of 7.41%. It also welcomed the further increase to $36.03 billion on September 13th, 2021. Our outlook. The overall outlook for both the global and domestic economies appear mixed. This is due to lingering uncertainties over the end of the COVID-19 pandemic, as well as continuing mutation of the virus. The slow and uneven pace of vaccination in developing economies is also compromising the achievement of global herd immunity, thus imposing a considerable headwind to the attainment of the global growth forecast. Some advanced economy central banks have given guidance of intended commencement of monetary policy normalization as monetary and fiscal policy across major advanced and emerging market economies have remained robust. This would constitute a further headwind to the full and inclusive recovery of the global economy due to the likely rise in cost of capital as central banks commence upward adjustment of their policy rates. Overall, the global economy is confronted with more headwinds than tailwinds, evidenced by the multitude of conflicting signals emerging from various major economies. Available data and forecasts for key macroeconomic variables further rebound in output growth for the rest of this year. This will, however, be hinged on and robust vaccination in Nigeria and across other countries. Foreign exchange market stability, further reduction in inflationary pressure in the economy, and continued intervention by monetary and fiscal authorities are very important factors to sustain the recovery momentum. Consequently, the Nigerian economy is forecast to grow in 2021 at 2.86% Central Bank estimates, 3% Federal Government of Nigeria estimates, and 2.5% IMF estimates. A committee's considerations. Committee noted the recovery in output growth and improving PMIs in the second quarter and urged the bank to maintain the momentum of its current policy measures to sustain positive and inclusive real GDP growth. The increasing level of insecurity in parts of the country remained a crucial point of concern for the MPC, as its persistence could adversely impact business confidence and derail the recovery. It continued to call on the federal government to prioritize security surveillance in the farming communities, as the increased supply of food will play a significant role in stabilizing macroeconomic fundamentals in the country. Committee applauded the moderate but steady decline in domestic prices as inflation decelerated for the fifth consecutive month, with forecasts indicating a continued downward trend. The committee also welcomed ongoing efforts towards revitalizing Nigerian Commodity Exchange to improve the supply value chain, curtail the speculative activities of middlemen in the agricultural sector, and consequently drive down prices of key commodities such as paddy rice, maize, wheat, and sorghum, amongst others. Members applauded the relentless efforts by the bank and other collaborators in ensuring the eventual takeoff of the infracore, as this will improve the business environment, attract new investments, and create new jobs in the Nigerian economy. The MPC further emphasized the importance of investment in transportation networks, power supply, and telecommunications, as these have a multiplier effect on other sectors of the economy. In addition to the infracore initiative, members urged the fiscal authorities not to relent in other complementary infrastructure initiatives such as public-private partnerships and engagement of Nigeria's huge diaspora through the issuance of diaspora bonds to fund specific projects. The MPC noted the moderate improvement in the equities market and commended the sustained investor confidence in the Nigerian economy. The committee, however, called on the federal government to improve the ease of doing business in Nigeria, to retain the current patronage of the Nigerian economy by foreign investors. Members applauded the continued resilience of the banking system, noting the progressive decline in non-performing loans ratio and broad improvement in all banking system parameters, despite the downside risks posed by the pandemic to the smooth running of businesses in Nigeria. While the committee was cognizant of the credit risk associated with lending in the current economic climate, it urged Nigerian banks to extend more credit to businesses and consumers to facilitate a seamless recovery of output growth, reduce unemployment, and stabilize prices. On the management of the exchange rate, committee applauded the bank for improving foreign exchange supply in the economy to meet legitimate business and consumer demand. Members thus urged the bank to take further steps to restrict the activities of unauthorized and illegal foreign exchange dealers in the foreign exchange market, stating that all foreign exchange transactions must be necessarily conducted at the investors and exporters window to ensure transparency and stability. The committee thus called on the bank to intensify surveillance over foreign exchange sales and utilization by commercial banks and customers to ensure that operators adhere to stipulated guidelines set by the CBN. The bank thus maintains its resolve to continue to restructure the foreign exchange rate market and will pursue all recent policies targeted at sanitizing the market to improve transparency and proper functioning and eliminate illegal FX dealers in the country. On government revenues, members urged the federal government to improve its tax collection in order to reduce its dependence on oil revenues and reduce its exposure to counter-cyclical shocks. Committee emphasized the growing need to improve the agricultural value chain, particularly in key commodity products like cocoa, palm oil, and cashew, to diversify the country's export receipts. It therefore called on the bank to support manufacturing initiatives that could achieve this objective. Committee applauded the bank for its resilience and robust efforts in managing the downside risks to growth and the upside risks to inflation since the outbreak of the pandemic, while charting a stable path for the economy to continue to expand its potential capacity through investment in infrastructure. Overall, MPC assessed the headwinds and tailwinds to growth as well as the upside risks to inflation, noting the immense efforts by both the monetary and fiscal authorities to achieve a substantial recovery in output growth and decrease in inflation. Committee urged the Presidential Task Force on COVID-19 to intensify efforts towards procurement of more vaccines and the vaccination of more people to ensure that herd immunity is achieved. Committee's decision. MPC expressed delight at the robust recovery of output growth during the second quarter and the continued decline in inflation in August 2021. Members, however, reiterated the need to put in place further measures to drive down inflation and improve real return on investment. MPC noted the unequivocal importance of credit growth to the sustained recovery of output and the moderation in price development as supply improves. It thus called on the bank to maintain adequate surveillance on banks to ensure compliance with its extant credit policy, while ensuring that they are not unduly exposed to credit risks. Committee also noted the relevance of the bank's suite of interventions to overall system credit, urging the continued use to fund sectors with high employment-generating capacity. MPC weighed the pros and cons of tightening, holding, or loosening. The stance of policy, noting the impact on output growth, price, unemployment, and exchange rate. Members felt that tightening will contract the current level of system liquidity and thus reduce demand pressures in the foreign exchange market. Feels that with liquidity ratio at 30, CRR at 27.5, that this is a tightening measure that should be maintained for now. This will, however, raise the cost of credit and reduce the volume of credit to the private sector. On loosening, the committee felt that this would lower retail interest rates and improve the ability of obligors to repay their obligations with a complementary reduction in NPLs. The gradual downward movement of inflation may, however, be compromised if policy accommodation is increased, leading to a further widening of the negative real interest rate and thus exacerbating capital outflows as investment in naira-denominated assets become less attractive. Members considered that a hold stance would allow the current recovery of output growth and decline in inflation continue smoothly, thus gradually moving the economy to a sustainable path before adjustments are made to the stance of policy. Based on the above considerations, the MPC made the decision to hold all policy parameters constant, believing that a hold stance will enable the continued permeation of current policy measures in supporting the recorded growth recovery and macroeconomic stability. Committee therefore decided by a unanimous vote to retain the monetary policy rate at 11.5%. In summary, MPC voted as follows. 1. Retain MPR at 11.5%. 2. Retain asymmetric corridor at plus 100 and minus 700 basis points around the corridor. And retain the CRR at 27.5%. 4. Retain liquidity ratio at 30%. I thank you most sincerely for your attention.
Thank you, Governor. And that was the communique of MPC meeting held today. We will go straight to the questions, and as usual, you used to show you represent, and then your question, but please just keep it simple.
Good afternoon, Governor. My name is Ndoka Chejin of the Nation newspaper. There have been complaints everywhere that since you stopped selling dollars to BDCs in Nigeria 8 weeks ago, the rate at the segment of the market has skyrocketed. What are your views, and do you have any updates on this? Secondly, there are also press reports that the CBN is investigating appropriate effects for certain FX infractions. How do you do this?
Yes.
Good afternoon, Governor and members of the MPC. I'm Nancy Naji, the anchor of Monitoring Nancy. At the CIBN meeting just a few days ago, you made an announcement of the establishment of the Nigeria International Financial Center, NIFC. I would like that you provide updates on that, on the establishment, and some other projects that the CBN is heading, projects such as the Commodity Exchange, the National Arts Theatre, the Infrastructure Company, and most recently, eNaira. Thank you.
Good afternoon, Governor, members of the MPC. My name is Uchi Usim. I work for the Sun newspapers. You can see that the inflation is going down. It's showing signs of they're coming down. So I want to ask you, what do you think is actually bringing this about, and what will you do to stabilize the economy and keep it that way going forward?
Good afternoon, Governor. My name is Leah Katumba from Nigerian Television Authority. Independence Day is just a couple of weeks away, and the eNaira is scheduled to take off on that very same day. So I'm hoping you'll be able to throw more light on what will be the status of the fiscal Naira, and how will these be affecting space in Nigeria with the eNaira. The CBN chose a foreign company to partner, and most people will be wondering why we're not looking locally into the local industry. If you could speak more on that.
So, Governor, I have two questions. Sending one from Sunday Michael of Daily Trust. In your remarks at the CIBN conference earlier in the week, you disclosed plans by the CBN to establish the Nigeria International Financial Center, NIFC, next month, in addition to the anticipated takeoff of the Infracom, also in October. Could you highlight the benefits of the NIFC? And then from Collins Wednesday of the Nation newspaper, that last week the bank issued a statement claiming a circular purported to have been issued by the bank on the alleged conversion of domiciliary account holdings into Naira. What is the bank doing to quell speculations about the exchange rate between the Naira and the US dollars? And this just came in now, but it's just similar to question one asked by Chijina Ndoka. Just about FX. And, so, I'm just take that. FX applied to the cards. And that's from Francis. Thank you.
Thank you very much. The first question is about asking for updates on the BDC our decision to stop allocating dollars to the BDCs, and the fact that as a result of that decision, the exchange rate in that sector has skyrocketed, and what are our views? When you ask me my view is, number one, that the only exchange rate that I recognize today in the Nigerian foreign exchange market, which is a dominant market, remains the investors and exporters window, which is a market that we expect everybody that wishes to procure foreign exchange, somebody who wants to sell foreign exchange, go to your bank, the investors and exporters window will attend to you. I'm sorry to say that I do not, and I do not intend to recognize that there are any other rates in the market. And I will give you explanation. 8 weeks ago, yes, you are very correct, we did stop the allocation of foreign exchange to the BDCs. Indeed, we began to ask ourselves, why did we wait for so long that we continued to do this? The reason is because Nigeria remains the only country on earth. The Central Bank of Nigeria remains the only central bank in the world, as at 8 weeks ago, that would dip its hands into its reserves, our commonwealth, and you pack dollars and begin to sell it to bureau de change operators in the market, all in an attempt to stabilize foreign exchange rate in the market. I continue to recall, even when I was at the other side, when I was a regulated entity, or I was running a regulated entity, that when exchange rate begins to go up at this so-called market, the central bank begins to call. I remember a deputy governor in central bank calling me at Zenith Bank saying, "Governor, can't you see that the black market rate is going up, and we find out that your bank is not coming to take dollar to sell, come to take dollar to sell and pump into a black market and illegal market." That is what we, in this country, central bank, we decided to adopt as a way to stabilize exchange rate. For me, it's a wrong decision. And we should really hold ourselves that we decided that this will stop, and it has stopped for good. The reason I say this is because the Bank of England does not sell dollar to bureau de change, even though they exist. The Fed does not sell dollar to money, other FX dealers in the United States. Indeed, nobody talks about bureau de change rate on the streets of London. If you go to Oxford Circuits, the exchange rate that a bureau de change operator will give to you on Oxford Circuits is certainly different from the rate that a bureau de change will give you in Camden area of London. Yet, in the city of London. So it really beats my imagination that Nigeria carried on with this kind of practice that tended to support illegal activities of people who are involved in graft and involved in corrupt practices. What do they do? Go collect naira. Instead of collecting naira as bribe, you tell the person to exchange it to dollars so you can have small packet of dollars in your pocket. And yet, Central Bank of Nigeria, in an attempt to moderate rates in that market, take dollars from our reserve to support the corrupt tendencies of people. Or is it about, even through its activities, that we have unwittingly supported activities of those who illegally buy foreign exchange from this illegal market, carry them in aircrafts out of buy arms and ammunition and bring them back into the country and conduct crime. Whether it is Boko Haram, whether it is kidnapping, whether it is all sorts of nefarious activities, we, central bank, take our country's dollar and sell to people to go and buy arms and ammunition to come and hurt us. That is what we're saying that people want us to continue to do. We cannot do that any longer. We can't. What we're saying, if you have any legal, legitimate business you want to conduct, please take your business to a bank. You want to travel? Go to your bank. They will sell you FX. You want to pay school fees? Go to your bank. They will sell you FX. Pay medical bills, which are some of the reasons that people give for going to Bureau Exchange. Please go to your bank. Indeed, I want to put it on record. If the amount you want is even above the limit that is recognized, and we find that the reason you are making those demands is legitimate, your bank will speak to us and will give you more than what is even the limit. Don't go elsewhere. Go to your bank. In the same vein, you have dollar to sell, go to your bank. We don't recognize and we will not see it again. That is our position. And people are saying, oh, banks are not selling. We will continue to monitor the bank. And I have said it, if anybody sees a bank, you go to your bank, they don't sell to you. We advertised an email, we advertised hotlines, and we said you should call the bank. Call us. We would intervene and ensure that that bank sells to you. However, if you go to a bank with fake tickets, fake visa, fake passport, we have told them not to sell to you. If they sell to you mistakenly because you hoodwink them to sell to you, and after 2 weeks, they check and find that you canceled your ticket or your visa is fake, they will call you because you are their customer. They have your BVN, they have your number. They will call you to return the dollar. If you do not return it, they will place your name on their website, your BVN on their website. We will pick those details. We will send them to EFCCs and other crime agencies. They will pursue you. You must return the dollar because you cannot acquire it illegally. That is our position. We conducted a study. One of the banks, in one day, sold to 52 people who said they wanted to travel. After 2 weeks, they went to check. 40 out of the 52 have cancelled their ticket. We have a situation where close to about 70% or 80% of people who went to a bank to buy business travel allowance on the excuse or reason that they want to travel, banks sold to them, turned back, and then went and sold it to a black market because they wanted to enjoy the arbitrage. They were asked to return it, and we are going to pursue you if you are involved in these nefarious activities. You want to do legitimate business? Conduct a legitimate business. We will be with you. That is on Bureau Exchange. We are not going to go back there again. Now, Anaboki FX. Yes, unfortunately, Central Bank, our colleagues here wrote a memo to banks and asked those banks to provide information about Aboki FX. We have been studying the activities of Aboki FX in the last 2.5 years. There was a particular time I asked our colleagues to call the so-called owner of Aboki FX that we want to understand his model, his basis, and how he came about advertising those rates. We find him as somebody, a Nigerian, who lives in England and conducts this nefarious and criminal activity on our economy. It is an economic sabotage and we will pursue him wherever he is. We will report him to international security agencies. We will track him. Mr. Oniwide will find you, because we cannot allow you to continue to conduct an illegal activity that kills our economy. For your information, our preliminary findings reveal the following. First, let me make it clear that if you are running a legitimate business and following our rules at the central bank for use of financial system, there is nothing to worry about. But but for those who think they are smart and they want to continue to sabotage the efforts of central bank in running this economy for the good of Nigerians and this government, will make life very difficult for you. Your time has come. We will continue to do our jobs of safeguarding the financial system for the betterment of everybody. Now, on Aboki, the company was registered in the UK in November 2015 and is owned by one person who claimed in his regular filings that there are other people with significant interest in that business, but he does not want to name them. So, who are these significant persons behind him? Why hiding? This is on UK's filing records, and we will go there and conduct those investigations. Since the inception of this business, he has continued to file the same accounts to the UK government, the same £1,000 cash at hand. That is his balance sheet. £1,000 cash on the one side of the balance sheet, and then same 1,000 total net assets, same 1,000 shareholders funds, balance, net debit and credit 1,000 both ways, consecutively for 4 years. Yet here in Nigeria, he and the company has over 25 bank accounts with about 8 banks in both Naira and dollar with significant turnover, also showing him simply milking the system through speculative activities on the Naira and collecting his proceeds in cash through a particular ATM in London. Our preliminary findings suggest that this website was built and is being used purely for the purpose of foreign exchange manipulation and speculation. They get Naira loans, use it to purchase dollars, take a position, change the rate over a given period, sell the dollars, they purchase and make a profit. This is completely illegal, it's unacceptable, and we will pursue them. Now, on Mr. Olumide, another finding also revealed that Mr. Oniwide, right, the owner of Aboki FX, is an illegal FX dealer. Between February 2020 and May 2020, and sold tens of millions of naira in FX to several Nigerian companies, and we'll find those companies as well, in contravention of our FX laws. Because he is an FX dealer, illegal FX dealer, he directly benefits from the rates he quotes daily on his website. We are finalizing our investigation and must warn these companies that patronize him that they are also going to face our wrath. A few questions. Has Nigerians ever asked how exactly Aboki FX collects his data that he publishes on his websites? How many BDCs can claim that they have either seen a staff of Aboki FX coming to ask for daily rates? Or how many BDCs send daily returns on exchange rate to Aboki FX? How then do they determine what the rate is and they post them illegally on their website? In which other unlicensed single person be the one that sets exchange rate in that country? How come he sets exchange rate of our own currency? Why is he not setting exchange rate of pounds,